Hello, everyone. Dave Landry here from DaveLandry.com. This is Trading Simplified. So what do we talk about? Well, I want to talk about the methodology in action. That's going to kind of dovetail into a lot of other things I'm going to talk about today. We have a mystery chart reveal. We have a new mystery chart on the short side this week. And I want to talk a little bit about where the money is relative to the methodology and relative to being a trader versus an investor. And then I got a question in the YouTube comments about how to apply trading to investing. And the more I think about it, I think we're just going to probably scratch the surface on that today. But I think it's a great topic. And it's something I've really been wanting to get into for a while. So I'm glad to get that question. By the way, I do take requests if you would like me to cover something that makes my job a lot easier. So just let me know. And toward the end of the show, I know I promised last week, and hopefully we'll have enough time this week, but I do want to get into the live crypto charts because crypto's been pretty hot as of late. If you need to reach me, DaveLandry.com/contact. If you want the slides in this presentation and all the other presentations, including a mini market timing course and a bunch of other stuff and limited access to members areas, all three of my books in PDF format, and enough stuff to keep you busy for a long time, go to DaveLandry.com/StockCharts. If you need to reach me, again, DaveLandry.com/contact. Also, if I'm not able to cover questions or answer questions, I should say, in this venue, which is a little bit of a more limited time slot, I have a more open-ended show on Thursdays, DaveLandry.com/webinar. Register even if the link is old, and you can come and ask about stocks there or anything else you want to ask about. All right, let's talk about the mystery charts and the methodology in action. So here was our mystery chart from last week. We're going to make that reveal. It is CFLT. Our entry was up there at 65. It was in a nice longer term uptrend. It pulled back, kind of the bread and butter of the methodology, the pullback. And we enter if and only if the market begins to rally. In this particular case, it did. And then it began to fail miserably. The good news is today, at least right before I went live, it was up about 3.5 points. So it looks like it's coming back nicely, but not quite enough to start kissing each other just yet. Here's our mystery chart this week. It's in a long-term uptrend, but then notice that it began to sell off hard from all-time highs. And it's a pattern I call a first thrust. It makes that first thrust from all-time highs. And by the way, everything I do has a psychological backing to it. So I'm looking at the charts and I'm reading the psychology of the market through the charts. So right here at all-time highs, anyone who's ever bought this stock is very happy, with possibly exception of the guy who bought it like right there and it reverses. But for the most part, everybody's happy. And as the stock begins to sell off, people are not happy and they start thinking about selling their stocks. And then when it pulls back a little bit, they feel a little bit of a relief. And if it triggers an entry, which the entry is here, stop is here, and initial profit target is down here. If it triggers an entry, then they're going to be forced to make a decision whether or not they should get out of the stock. And the more it drops, the more they are going to be inclined to get out of the stock. So that's our mystery chart for this week. Now I want to shift gears a little bit. And this is kind of the part I was talking about earlier, where it kind of dovetails into the question of the week: trader or investor. So here's a stock that triggered way back last November, and we were able to take partial profits out and go back in if you're bored or can't sleep at night and watch the money management shows that we've done, or better yet, go through the money management modules on my website. And the idea is to capture the swing trade profit, a quick little profit. And as I talked about, I think 2 weeks ago, it's psychological and a little bit statistical, the way that works out. Anyway, once we do that, we are going to let things kind of loosen up a little bit, let the stop loosen up. And hopefully, and I know you should never use that word in this business, but hopefully ride out a trend for a long time. And we do that via a trailing stop, as you can see here. And we let that stop widen out to adjust from a shorter term trade to hopefully what becomes a long term trade. And this is one of our bigger winners of the year. It was up 500%. And we held the position for 228 days. Now, I'm slotted as a swing trader, meaning that I take profits fairly quickly, but I will hold stocks longer term. So this is a significant move over a long period of time. APG triggered way back last July. We once again were able to get the swing trade profit out, and you can see it's been a pretty good ride so far. And that's 452 days, which started as a swing trade, turned into a nice longer term trade. So the point is, even though I'm a trader, holding a stock for well over a year like this kind of helps me, or kind of makes a transition to more of an investor. And I'm going to get to that in a little more detail in just one second. Here's a former mystery chart. You can go back in to the show we did early this year. One of the first shows I think we did this year, I think January 5th, if memory serves. And this was the mystery chart. We flipped it out within about a week or so for a little swing trade profit. And we've been trailing a stop ever since. And so far, so good. It's been a pretty good run, knock on wood. So it's 279 days so far, and hopefully counting. I don't know, I just said hope again. And by the way, this is an example I've been using lately, and this is why the market got a little iffy back here. I think it was on this day here around September 13th or so, maybe September 20th. And the overall market sold off a little bit. And the reason we don't exit all of our positions is we never know if one's going to take off. And this one's gone up about 40% since then. So that's why, just in case one of them takes off. And sometimes, and we'll wait and see what happens. If this market goes on to make brand new highs, then what I'm going to do is we're going to take a look at the portfolio before and then after the slide and see what happens. And I guess it'd be more important to take a look at the portfolio if the market actually tops out, to see whether or not hanging on to those positions actually worked out. By the way, if you want to look at these trades, you can go to davelandry.com/archives. And I think all of the mystery charts so far came directly from my trading service, and the archives to my trading service can be found there. People are like, can I get a trial? It's like, no, I give you 10 years or 20 years or so of archives, so you can go in and get a feel for things by looking at that. And I encourage you to do that. In fact, the more work you do, I think the better off you are, and you'll be able to get a feel for things, both good and, more importantly, bad too. So you need to know the good with the methodology, and or any methodology for that matter, and the bad. All right. Somebody put in a YouTube comment on last week's video, and he said, thanks for your videos. You're a trader, but I'm trying to figure out how to apply the system to retirement portfolio versus buy/hold for life, as most financial advisors would advocate. Well, I have a lot to say about that in just one second. The system he's talking about, which I'm going to touch upon in a few minutes, is the TFM 10% system. IMO, there will be lots of diaper changes by folks following their FAA's advice when the market finally comes back down to earth. I see these tools and learning to run away as great advice, but I'm not yet certain on how to apply it in a diversified retirement portfolio. When you're buying more index funds, ETFs, mutual funds, et cetera, maybe a retirement show to show how to do this could help. Well, I'm going to touch upon these things, but I think before we get into some of the nitty gritty about how you may do this, I think there's a lot of things that have to be kind of fleshed out first. Now, I'm not a financial advisor, therefore I can't give financial advice. Everything I do, obviously, according to the disclaimer, or as mentioned in the disclaimer, is for educational purposes only. However, I do know bad financial advice when I hear it, especially from those who do not or choose not to understand how markets really work. Now, sometimes on the weekends, to torture myself, if I'm out running errands, I'll put on talk radio, and usually they'll have on these financial programs, and I'll play a little game with myself. I'll try to see how long I can listen to them without giving up in frustration. And last weekend, I made it about 30 seconds, if that long. And the guy was asking some things like that did make some sense, like basically, are you being prudent in your investments and so on and so forth. And then he said, did you hold long enough after the pandemic slide to get all of your money back? And I'm like, there's a neighbor of mine that used to say, if you said something preposterous, he'd say, what? So I'm like, what? So what he's talking about is, earlier last year, we had a TFM 10% sell system. trigger. And what's interesting, by the way, is this weekly system, which I intended to be much, much longer term market timing, actually triggered before some of the daily signals. So that was kind of a cool thing to watch this thing unfold in real time, to see that it actually caught up to the market really quickly, which I thought was pretty cool. I know you probably have a part of it with me. Anyway, but the market then began to implode, and it dropped nearly 30% from the signal. Now that's the diaper change moment. Like, how much does the market drop after you exit it? Now it did form a V-shaped recovery, and it just came right back. But I can assure you that they don't always do that. And I'll show you a few examples of that in just one second. We had the buy signal over here, and you can see that we're actually buying back in at a little bit higher level. So technically, this is what's called a whipsaw. So yeah, it's a whipsaw, but you were able to sleep through a 30% slide. And believe me, as you'll see in a few minutes, it could have been much, much, much worse. I had one friend in particular, but I did have quite a few people call me with lots of concerns. And when he was down significantly, he was pretty darn depressed, because he's hoping to retire within the next 4 or 5 years. And at the rate his account was imploding, that was not going to happen. So I know for a fact that he had many, many, many sleepless nights. And he was part of the inspiration of why I did a show a few weeks back called Before the Bomb Explodes. And I decided, with the market at all-time highs, it would be a really good time to do a show on market timing, because people like this friend of mine, they wait for the market to go down about 20 or 30%, and they're in a bit of a panic, and then they give me a call. And my point at that point is the bomb's already blown up. It's kind of darned if I do and darned if I don't. Try to help them. If I don't encourage them to get out, then the market goes down another 30, 40%. If I encourage them to get out, of course, we have a V-shaped recovery like we had. But anyway, I really think that's bad financial advice, even though I'm not allowed to give financial advice. But I think it's bad financial advice to hold through everything at all costs, like the gentleman's question referenced or suggested. Now, how much worse could it have been? And a lot of times people don't believe me when I tell them how bad markets can be. And believe me, I know I've lived through quite a few bad markets. And I just encourage them to go out and look at the charts. So if we go back to the 20s, and I've showed this chart before, but we had a TFM 10% sell system trigger. And that was right, obviously, before the Great Depression. And the market basis the S&P 500 lost 82% of its value. Now, you might be thinking, that was then, this is now. Well, go no further than 2000 and look at the signal on the NASDAQ. And you can see we had that signal right around, I guess, April. And from the signal, the market lost 66% of its value. And from the peak in 2000 down to the low, it lost 77% of its value. And that should make you think that you should not hold on at all costs. Now, if you take a look at the NASDAQ, and one thing that I noticed let me go back one slide and show you something. One thing I noticed here was the market did start going up a little bit, as you can see, after the sell signal. I was wondering why the system didn't re-trigger. Well, this chart was created before the plugin was created, and the plugin has the buy line in it, as you can see here. Now, what's interesting is the buy line is 10% below the 50-week closing high. And the buy line actually did a pretty good job of catching up to price. A lot of times the buy line is a bit away from the price, as it is right now, although it's gotten kind of closer in more recent weeks, obviously. But anyway, the reason we didn't re-trigger was because the buy line had followed the market up so much. Now, what's kind of interesting in this case, now the one I just showed you was a V-shaped recovery. where your buy and a V-shaped recovery is going to be way up here. So you're going to be getting in higher than you got out. But if we get into an extended bear market, the good thing about this TFM system, and I'm not selling you on a system. In fact, I'll give it to you. You'll get it for free if you go to that link. But the thing is, dailylander.com/StockCharts. The thing is that if you get into an extended bear market, it will begin to catch up with price. And so you will be buying in 50 or 60% lower when you have an extended bear market like this. Now, here's a chart that amazes me, and I know you probably want to part it with me, but if you look at the S&P 500 weekly and go back to 2002, there was about 6 or 7 year low there. But what's really amazing was in 2009, we hit 13-year lows. So let's say you started invested in a kid's college fund or something, and you're hanging on to that investment, and 13 years later, it's time for junior to go to college. You might have to have a hard conversation with him and say, it doesn't look like Ivy League, might be junior college. Nothing wrong with junior college. I'm public educated. No comments on how that explains a lot. Now, my point with all this is that you need to think like a trader, because sometimes markets go down a lot, as I often say, and it's not an original thought, but all asset classes at some point in your lifetime will lose at least half of their value. And just go back a couple of slides and look at the S&P 500, and you'll see that it's lost half its value twice in a relatively short period of time. Now, if you're thinking like a trader, which I think you need to think like a trader, and I think that's what the gentleman is hinting at, is that it doesn't mean that you're hitting that buy sell button like the rat going for cocaine, although I do occasionally overtrade, admittedly. It means that you are getting into positions and staying with them as long as possible. And you want to stay with them as long as they are performing, and you attach a performance metric to your investment. So in this particular case, our performance metric is a trailing stop, which we allow to widen out over time. We only move it in the same direction as the market, never away from the market, but we let the market pull away from it a little bit. And that allows us to ride out some of these longer term corrections, as you can see in here. And hopefully, and I know there's that word again, but hopefully a year from now, I'm doing a presentation and we're still looking at this same exact chart. So the point is, even though I'm slotted as a trader, a swing trader in general, and I do occasionally take some intraday trades, I will hold on to a position as long as it moves in my favor. Now, if you look at the TFM system over the past 90-something years, it was in the market for 65 years. So it's not an in and out, in and out, in and out type of thing, or market timing doesn't have to be like crazy in and out. And as I was looking at this right before we went live, I noticed, okay, here's one period where it stayed in for 7 years. Here's a period 4 years. And then I thought, I need to add a column in the spreadsheet to point out how many days it stays in. And then I looked over to the right and I had already done that. So you can see there's quite a few periods of time where it was in for well over 1,000 days. And then obviously that 7-year period was 2,758 days. So you're not in and out, in and out, in and out with some very rudimentary market timing. And by the way, as I preach, market timing is more about, or it's not about so much about beating the market, but more about not letting the market beat you. And it's pretty hard, like my friend, to sleep at night when you're nearing retirement and you're watching your investments erode day by day. So a trader is an investor, if you think about it, but he has a performance metric. So you want to be basically buying strength and selling weakness. And as I've said many times, when people say, "What do you do?" I explain to them what I do, tell them I'm a trader. And then when they dig a little further, it's like, well, I just buy things that go up and I sell things that go down. And sometimes you can do just that. And at the least, you need to have that kind of mindset. Like, how do I buy something that's going up? And if I'm in something that starts going down, I need to think about selling it. So you'll have to come up with your own performance metrics, but we'll get back to something like the TFM system to possibly help you. Now, since all asset classes will lose half of their value, as I said a minute ago, at some point in your lifetime, you're definitely going to need some kind of performance metric because you don't want to lose half of your money. Now, a while back, and I think this is kind of a good example, it kind of dovetails into what the gentleman was talking about. But a while back, I was in this. How do I explain this? I inherited some money, but it's kind of tied up to where I can't really move it out. And it kind of aggravated me that as a trader, because I really want complete control of it. But I said, well, you know what? Don't look a gift horse in the mouth, right? So I noticed that the metals fund was doing really well. And I went ahead and took a buy signal off the TFM system. And this is just I have no idea what this mutual fund is, but it happened to be one available. It happened to be one that was doing well. And you can see I got in here and then I exited up here. So that was a pretty good ride in that. So you might want to go in and maybe take a look at some longer term moving averages, take a look at something like the buy line, the TFM 10% system, and then use that to help time your investments, so to speak, or at least to provide you a performance metric to where if they're above the buy line, they're doing okay. And if they're below the buy line, then they may be in trouble. And you could also use something like Landry for that. And in upcoming shows, I'll get into that in a little bit more detail. But you can see this was a pretty decent run, better than a poke in the eye, about 30-40% over several months. So you do that a few times a year and you're doing okay. So let's shift gears now and talk about crypto. I know we just kind of scratched the surface on thinking like a trader or as an investor who needs to think like a trader, but I promise you, I'll revisit that more and more. And that's, my biggest, I don't want to go off on a rant here. I know too late, but my biggest problem is they being a lot of these financial guys talk like the markets will always come back. And a lot of times they won't. And sometimes when they do, it might take 25 years or more. And again, just go back and look at the market making 13-year lows not that long ago. Now, as far as buying things that go up and selling things that go down, and by the way, here's the thing with crypto. A lot of people are like, oh, I don't trade crypto. It's like, well, it's a market, okay? And markets are markets. And it doesn't matter what a market is. If it's tradable, then it might be worth trading. Now, don't bet your life savings on something like crypto, but you can go in and trade at a very small size and you could do quite well when, of course, it's running. Now, what I like to do as far as the buying things that go up, of course, I like to use Landry pullbacks and things like that. And we'll take a look at some of those. But sometimes the easiest thing to do is just sort the market, especially because it's an inefficient market. Sort them by percent change. And you want to seek to buy the stronger ones with a few caveats. Okay, so getting over to the ACP platform with crypto, as I said earlier, sometimes you can just seek to buy strength or buy things that are going up and then sell things that are going down. Now, usually, except for a couple of exceptions, such as IPOs, which can be inefficient, and something like crypto, which right now seems a little inefficient or quite inefficient, when the market is running, when you sort by percent change, you see all these big percentages over here. Sometimes you can go in and just buy the stronger ones with a few caveats. And I'll flesh out a little bit of that now. By the way, a lot of people are like, oh, I don't trade crypto. It's made up. And it's like, well, it's a tradable market. And I'll trade any market as long as it is tradable. And I think as a trader, you have to think like that. Now, crypto may come and go, but there'll be other markets down the road that might be worth trading. And this is a wonderful potential opportunity in crypto. So again, just sorting them by the strongest. Let's take a look at some of these. OMG, I'm actually long this one. I got long this one back here on this breakout. I'm not a huge fan of breakouts, but when the relative strength is very strong, sometimes you could just buy these things again as they're going up. I probably bought in somewhere around here and I flipped out half of them for a quick profit. And now it's actually set up again, as you can see, and it's also up 10%. So it's not only a pullback, but it's beginning to rally out of the pullback. Now, when the markets get kind of mediocre and you're not seeing a whole lot of big percentage gains over here, kind of like we might be kind of simmering down now a little bit. Kind of sound like simmer down now, huh? Anyway, it begins to simmer down. Then you want to just look for more like pullback and trend type of pattern. So let's go through a few of these and let's see if we can find something interesting sorted by percentage. I'm long this one, and I probably got long on this bar here when it was beginning to take off, but now you can see it's pulled back again, and it might be worth a shot as a pullback. And let's see, we'll find you a Landry light pullback or two. Let's see if we can find something in here. Okay, let's sort them by their symbols now. And I'm going to go through these pretty quickly since we're a little low on time and see if we can find you something that's set up. So we're looking for the currency to be going up. Currency, I use that. I use that a little that term loosely, but we're looking for them A to be going up, and then B to either be set up or very, very strong on a relative strength basis. So let's see if we can find you a Landry light pullback or something. And if not, I'll show you one historical, or one that happened in the past, I should say. But anyway, a lot of people say, how can you look at 4,000 charts a day? Well, you can see I just went through about 100 of them or so. So it looks like the market is not cooperating as much. But again, you're looking for the Landry light pullback. Go in and see prior shows for that. And if the markets are really running, again, you've got a lot of green, then you want to go in and just play the relative strength game and seek to get into ones that are higher up. Okay, since we can't find a live one, this one had a nice little run here, and you can see it pull back to the moving average. That would be a Landry light pullback. You can watch the Landry light down below. And let's just see if something else will pop up really, really quick. No, looks like the market's not cooperating. It's always funny whenever I'm get excited about Bitcoin or cryptocurrencies and everything. Usually that's about the time where they stop going up, but they'll go up again. So don't worry about that. This one might be worthwhile when it pulls back a little bit. That's flow. Well, look, that's all my time. I want to thank all you guys and girls for watching today. If you need to reach me, Dave, www.davelandry.com/contact. If you want slides from this show and all the other shows combined, go to davelandry.com/StockCharts. If I get my slides to work, there they are. And again, davelandry.com/webinar for a webinar every Thursday. And again, I want to thank everybody for watching. Admitted Trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.